And China's increasing reliance on foreign demand, it's a critical weakness that was concealed by the country's stronger than expected March quarter growth. The reason? It raises the risk of a more severe economic shock as trade tensions rise. Net exports accounted for over 40% of the 5.4% increase in the March quarter GDP, the largest percentage for this period in over a decade, that is. That's also up from last year when trade accounted for almost a third of overall growth. The latest data is also up over the previous year when trade contributed about one-third of total growth. There's never been a more risky moment for such reliance on foreign demand. The export engine that has been powering China's growth might potentially come to a standstill as a result of the US increasing tariffs on Chinese goods. What is not helping is a general weakening of global demand as a result of President Trump's trade policies. China has stepped up its trade battle with the US by warning other nations not to make arrangements with Washington that would harm Beijing's interests. This shows how others could also end up caught in the midst of this dispute. The Ministry of Commerce has said that Beijing resolutely opposes any party reaching a deal at the expense of China's interests. That comes as the US is tightening its noose, as you know, so that China does not circumvent its tariffs by using allies to sell its goods. Now, separately, China's shadow banking crisis shows that wealth wipeout is deepening amid a slowing domestic demand. Even though it's been almost a year since a major Chinese trust company went under, the $3.7 trillion sector is showing no signs of revival. And according to a Bloomberg report, state-appointed custodians have recently concluded that Zhongrong International Trust is involved and insolvent. They have submitted a winding-up proposal to regulators, and the company had approximately $108 billion in assets in 2022, when the government became involved due to significant losses on real estate and other investments. The evaluation shows that a significant part of China's shadow banking sector has been hurting for a while now. It also confirms that Beijing isn't prepared to help out wealthy investors. For latest news, download the WION app and subscribe to our YouTube channel.